um right. You all know that, like I noticed recently, my videos are going out, my videos are moving out. I intentionally left the lifetime group open for people to wander around with the videos like they want because they deserve to have it. But my videos are going anywhere. Everybody have them right now, and it's not like it's cool. Me, I'm okay with it. It's not like anything. Even when we were learning, a lot of people's video leaked to us too, right? So I know that one way or the other, definitely mine is going to leak to other people. So now the models I'm giving you out are strictly based on what I've seen that consistently happen on the chart. And you need to be very, very good and consistent with them. Backtest anything that have been given to you a little, anyhow you want to backtest it, and then forward test and then look into it, then you can use it to execute before you start using anything, right? So if you pay attention to everything I'm giving you out, especially the models, which are the best part of the entire mentorship, the entire thing I've done in my trading career, the model here is the best thing I found out, basically. So anything that um I talked on the model, they are based on, like you say from the first video, I said, we are using them after everything is in place, in the sense that you already have your directional bias, right? Immediately after you have your directional bias, that's when you decide to play them. They are just ways. See, remember, I'm not after huge RR anymore. I am not interested. You don't even concern me. See, if you can consistently win 1:3, you're going to be more profitable than someone because he cannot consistently catch 1:5. There's no way. The consistency in 1:2, 1:3 is more than the consistency in 1:5, 1:6, right? Which is, it just depends on your trading plan. So I think I'm not going to say too much. Let's get into this model. So we'll have to recap a little bit, like you know how I always recap some little bits and then I move forward. So model 6 on your screen here, I'll explain it. But before then, let's talk about the entire things I've talked about. Remember, anytime the market hits a key level, the basic knowledge, because I want it to sink in your head, and then the market breaks out. Immediately after the breakout, you know there are different type of breakout, right? Remember there are different type of breakouts. Now let's say this is a daily key level right here, and let's say it is a daily breakout also. Makes a lot of sense, right? Daily key level, daily breakout. Now, daily reject, daily breakout. Now, how do we execute? We are going to be using a daily key level to execute because we have a daily breakout, right? We're going to be using a daily key level. Now, this is where I have questions. After the daily breakout, we are going to be paying attention to the QM right here and what? And the apex right here. Remember. Now, we also have OCR right here sometimes, right? Then, if this, sorry, you know how they work though. If this is not mitigated and this is not mitigated, then we have no business with OCL. We're going to be paying attention to QMs and apexes. If this has been mitigated, then we're going to be watching apex. Now, if the market decides to any of them, listen, then that's when you start playing models, right? You just pay attention to market coming to this zone, for example, and started dropping. You're not supposed to be shocked or surprised. Then if the market reject from here, you can play one of the two models. Yes, model 1, model 5, or model 6. Any of those models can be used to take a continuation because the market has refused to come back to any of this. So you shouldn't be upset. Also, 14B is likely going to occur around these zones here. So if the market refused to come to the 14B, refused to come to this, refused to come to that, I will play my models. I don't care. The models are so good that they serve as a confirmation entry. Sometimes if you are okay, let me wait and see what the market is going to do, and you waited for the market to come around here. Listen, you waited for the market to come around here or here. When the market comes, generally wait for another model. You use it as confirmation entry. So that's why I say the model is just you using your brain. If you have the brain, then your profitability is 2026. No way. See, consistent studying of the doctor system 3 months and you're not profitable, then I'm sorry to say, you like there is I don't think there is a model easier than this. right? So now let's get into the charts and let's talk about this. Is just a little recap of the entire thing. You guys remember, you guys know the model, you guys know how I execute them. Now let's talk about model 6. Remember, things must play out this way. Model 6 is a continuation setup that looks like model 3 and looks like model 5. But I use it in the H1 M30, but I prefer using the M30 time frame, right? So I use it on the H1 and the M30 time frames, 30 minutes time frame. Now, let's say we have a direction and the market is going to be dropping down to this next daily key level already. Now, I'm not someone that hold to this daily key level. I keep looking for short trades until the market comes to that zone. Now, you can still hold, especially if it starts from the apex, then you have the advantage of holding. Remember the sell on EURUSD last week or last 2 weeks, have I forgotten? Held down to the external liquidity, to the other daily key level. Why? Because it started from here. But if the market did not start from here, then maybe I'm not going to be doing that thing, right? Now, how does model 6 look like? Model 6, after the market has given you direction, market is going to form an RBS. A heavy candle is going to drop to disrespect the RBS, right? Now, immediately after it disrespect the RBS, we want to see, right? Not you, we all want to see the next candle open up, push up, the next candle, listen, the next candle open up, push up, tap on this RBS, and then sell, closing bearish. This is your entry. M30 H1 time frame. Now, let me tell you where it all makes sense. It makes sense when the M30 and the H1 present the same thing. I'll show you on the chart. Don't worry. I'll show you on the chart. But listen, there's an RBS or an SBR or anyone. The next candle open up. Just tap here and then the drop sets in. Tap, drop. Tap, drop. Right? Regardless of the entire thing that is above here, listen again. The move has already started, right? On the 30 minutes, you have an RBS, you have a QM, you have an apex. The market drop aggressively down. Then you have a 30 minutes or a 1 hour candle close below this RBS. The next thing you want to see is the market open up. Tap on the RBS. It's not going to exceed this RBS with like 20, 30 pips. No way. And then the market is going to drop down. You've seen the entry on my Twitter handle. You've seen it before. And I'll show you a lot of it. I'll show you a lot of it. Now let's get into the chart and I'll show you a lot. See, I'll show you a lot of, I've traded just this week and last week, I've traded like 10. I think I have traded 10. Now this is the 1 hour time frame. Let's go into the 30 minutes time frame. I'm not here to do bias. I'm here to just show you one of the models that have consistently worked, right? Now let's take a look at the chart. Do I have to come as high as this? Now let's take a look at this. This one very good example. The market did not go down for too long. I don't also hold for too long, especially if I'm trading gold. I just cut it 1:2, 1:3. I become more of a scalper since when I started gold. I hold sometimes depending on where I caught the move, right? Look at the way this 30 minutes candle closed bearish, just below this RBS, right? Just below. Look at it. But then immediately the next candle opens. This one did not tap, right? It should come up, tap on the RBS, and then the sell is going to start immediately. Okay, this is for bullish move. Immediately the market closed above this RBS. Look at the way the next candle drop into the RBS and then give us this heavy push to the upside. Okay, let's keep checking gold. I think I've seen this thing happen consistently on gold, especially this week and last week. I traded them a lot, right? Look at this. RBS, candle close below RBS. Market push up immediately into the RBS. Look, the market is not going to move too much pips above. If it moves too much pips, it's going to take you out. So you're going to have a standard SL when you're back testing this. Now look at this RBS, right? I traded this one too. Look at the way the candle closed below. The next candle push all the way up just to tap on this RBS and use it for sell. An RBS that have never been tested, not this. This one have been tested before it got disrespected. No, I don't want the one that have been tested before it got disrespected. I got an entry here, held down, close out at this zone. But when this RBS got disrespected, I used it again. Did I use this one? No, because this one has been used here before. Look at the way it happened. Market quickly come into it. That's why I say the next candle. If this next candle, 30 minutes candle, close without coming back into this, you don't need it anymore. This model is not going to play out. But immediately the candle open, you want to see this. Trade into it, sell. Trade into it, sell. Trade into it, sell. Look at how many have I showed you in a place. This one too, I placed a limit order here. I can remember market did not come back. This one missed, right? Market did not tag me there. This one missed. This one bought. Market is going to see it's in aggressive market conditions. It happens more in aggressive market conditions. So if you take a look at the entire market and the entire models I've taught you, from here, just through this 1 week price action, you can catch more than 40 trades, especially if you understand it. And that's why you see me just executing. And it's very difficult for me to share my trades now because it's an immediate something. Immediately the candle close, I just want to see it happen there and then. So for me to send a limit order, it has to be a swing trade. It has to be a long trade. Now look, this is a model 3. Is it not? It is. This is a model 3. Is it not? It is. This is a model 6, right? This is a model 6 right there. This is a model 3 if you change the time frame. Going to mix. No, I think there's a model. Oh my god, I saw this thing play out. If I change the time frame, I'll notice. Right? So if you notice the entire thing, you notice that there are a lot of moves everywhere. If you now switch to like the M30, M45 and other time frames, let's say like M15, right? That's when you now see a lot of model 5. Use your brain and you execute there too. The move, listen, the move have to start first. All you're looking for opportunity to capitalize on continuation. Look at this model 5. Market kept trading into it consistently, but the market did not close above. Your stop loss should be here. I don't care about how big the stop loss is. Another model 5 happened immediately right here. The sell happened here. And you see, there's no too much noise, nothing to, and then so many things are going to be displaying themselves on the chart. This is why I caught yesterday's trade, model 5. And you guys asked how. Like I said, you use your brain. You use your brain. What happened yesterday was, I know we're bearish. Market gave me everything I want on the higher time frame. Coming to the lower time frame, I come into the H1. When on the H1 time frame, H1 reject H1. H1 breakout gave me a new H1 apex. Now I went into the 30 minutes time frame and refined this. Sorry, I have to change this. I cannot use this. I refined this. Now, but what the market did was come into the 4-hour time frame. It did not come here. Yes, come into the H4, rejected from here. Immediately after the rejection, 15 minutes time frame. What happened on the 15 minutes time frame? Model 5. I don't use them randomly. Something needs to make sense. There needs to be a logic before you see me. That is my execution from here. Where did I close? This key level. Did the market reject from that key level? Yes. Even though it dropped back again, but I took my TP 1 to 2.5. I shared with you guys. It's a 1 to 2.5. Why? Because I closed out 2000 something, 2800 and something, which is up to 1:3. And this is it. I don't need to. It needs to make sense. Stop doing anything randomly. It's not random. It's not random. Right? Now, I also saw something that's same yesterday, one of my model on the 30 minutes time frame. I think it's on the H1. It's on the H1. What happened was that this candle disrespected this particular thing, came back into this. The next candle refused to came back into it. So I canceled limits. This candle should be the one to tag and sell, but refused. Then I'm not interested anymore. But when you come to the 30 minutes time frame, something happened right that same place. On the 30 minutes, immediately the candle closed below. It came back, tagged you in. You are in. The market dropped down. After tagging you in, it dropped down so low. So if you have a fixed SL, this can be a 1:4. Sorry, I think I saw this. I did not trade it. The same thing I just explained. RBS fresh. You don't need anyone that the market has used before. Market came back into it. The next candle tapped you in right here. After tapping you in, model 6, market what? Dropped. I don't know about other pairs for this. I'm not going to lie. But I've done this consistently on gold. See, any of the model you are playing, make sure if you have a storyline, the market must hit like a H4 key level, except if the market is aggressive in cases of what? Model 2 and 6. Market needs to be aggressive in cases of model 2 and 6. But you see the idea behind this H4 key level rejection, model 5. Anytime a H4 key level has been rejected, I check out model 1, model 5. Makes sense. Use any of them to capitalize. Makes a lot of sense. It makes a lot of sense. Okay, so I've shown you guys this thing consistently and how it happens consistently. So basically, my ideas are usually coming on gold because I pay attention to gold when I'm doing anything. So basically, that's it. I don't literally bring anything stressful into the chat, especially for me and my students. No way. And after that, man, I'm after simplicity. Things that you just come and you understand it and you just do it. Now, these things I'm teaching on gold, why not do them on gold? I'm sorry to say, it's not like I'm telling you that to gold play psychology, but why not do them on gold? If you do them on gold, you will see the simplicity. Now, look at this also. I executed this. Remember, 30 minutes got disrespected, 30 minutes got traded back into. The next candle must trade back into this. It must. If it doesn't, cancel your limit order. I've given you guys too much information. And if you guys are not profitable, then they cannot come and help you more. Because what I've given to you guys is enough for you to do anything technically. Psychologically, it's up to you. Use your brain. I'm not the one that's responsible for your psychology. It's also aggressive break, go back into the 30 minutes high, boom. Stay there. Happening consistently on the chart. Happening consistently. This was the one I missed. I think I was upset that day. Missed this. The market said no, and then I used this. Boom, model 5. Candle close bearish, come back, zoom, the sell started. I took this, I missed this, right? So this is how model 6 play out. So I know by now all of you must have understand this. Any of the model you're using, use your brain, take your time, study the chart, right? Then it's going to be very easy for you to make money. For model 3, for model 6, you don't need too much stop loss. It's going to be sniper. SLE is also going to be sniper. If it's not sniper, you're going to hit SL and get used to hitting SL. Embrace stop loss. You should know SL is a must. Okay. So let's take a look at US oil. I think US oil was one of my favorite pairs, and I saw a little bit of trade breakdown this week. So decided to share with you guys. Now, okay, this is where I started the class, right? So this US oil, now let's go into the daily time frame and let's look at something very beautiful, right? Right now, this US oil on the daily time frame. Now, what happened to US oil? Let's take a look. This is the daily time frame, and US oil, this candle, just look at just this candle, it dropped down, rejected from this key level. After rejecting from this key level, it also broke out. So what do we have? Daily reject daily, daily breakout, right? So it makes a lot of sense. We know we are bullish. We're bullish until the market comes at this into this zone, or we have an engulfing sell that can sell the zone here. So we're going to be targeting this or this. Daily reject daily, daily breakout. I don't need any H4 breakout. Now, in scenarios of daily reject daily, daily breakout, what do we do? Our entry key level should be on the daily time frame, refining to H4. We don't always need to refine to H1 because in cases of daily reject daily, daily breakout, H1 can be an over refinement and you can miss entry. You can if you want, but H1 can be an over refinement and you end up missing an entry. So we have this OCL. This is the only key level we have. And if you remember from the first doctor system, we said OCLs, listen again, are used if Apex and QMs have been mitigated. Apex have been used. The only key level here we have what is this OCL, so we can refine, right? Now, before I go into the lower time frame, which type of zones are we using for buys or sells? If you're using apexes, listen, if you're using apexes, we need an engulfing apex. If you're using or if you're using RBS, we need an RBS that's overlapping inside an imbalance with liquidity, or we need a model 3 for the better ups to make sense. And you need to come inside this very big gap. Now, I'll talk about this box. This box that have a line in the middle, it's telling me that any key level that is from this middle line downward is higher probability than the one that is above. That's why I have my box with a line. You get? So now we go into the H4 time frame. Now on the H4 time frame, I have the box right here. Okay, we have a daily reject daily, we have a daily breakout, so we're not going to be making too much noise. Now inside this box, which key level do we have that we can use for the buy? Look at the line here below it. We have this engulfing buy candle. Boom. Then this is where your buy is setting in. Did I stress myself? No. Like I said, I promised the first day I made the video, if you remember, I said, if you understand how I approach the market, 2026 and you're not profitable, then now you do yourself. That's the first thing. Secondly, the introductory video I did is enough for you without knowing any model to make money. And this is what we've been using. Look at it. Look at the entry. Look at the engulfing buy candle. Boom. Market is not buying already. And you know, yes, oil is one of my favorite pairs already. So, right now, I'm coming. If you refine into the H1, this is what I was looking for, right? You're going to be using this. And remember what I just said, it can be an over refinement. If you have a daily reject, daily breakout, your refinement should be daily refined to H4. If you have daily reject, daily H4 breakout, your refinement should be H4, H1, right? Because the breakout happened on H4. So one time frame lower refinement, H1. It's cool. Daily rejection happened on the daily, but breakout happened on the daily. So refinement should be daily to what? H4. H1 can be an over refinement because I've seen it happen consistently, and that's why I call it an over refinement. Okay, now you missed the entry on the H4 time frame. This is what I want you guys to notice. You missed the entry. This is the origin of the trade. You missed the entry. How do you take continuations? How do you take continuations? Any of the model can come in play. If you take a look at this entire thing, right here we have a daily reject daily, and we have a daily breakout above here, right? Daily, I'm sorry, H1 reject H1, H1 breakout. This is a 14B, and we're going to be looking out for this to enter from. Are we going to be entering from this? Or are we going to be entering from this? There is a daily, there's a 14B. I remember the first thing I said inside this video is that you see, sometimes market hardly comes back to that your 14B. That's why I didn't call it any of my model. It's a 14B and it has to be a 14B. A model is different. This is a model 3. Market went up, created this and the gap, and your entry is here. And then you continue the buys. Now, you want to refine your buy, for example. Yes, there's it. On the H1, let's check the M30 time frame. The M30 is cold. We have to use it there on the H1, right? And then you take your buy from here. This is your continuation buy. Market is not going to hit your stop loss, except if you are very stupid to play stop loss anywhere. What happened here? Market break above here. Where did you enter? You take a continuation buy. Now, secondly, market comes up again on the H1 time frame. Market break above this key level, model 6. Immediately, the next candle came. It entered. Yeah, it run very deep. It's cool. But yes, the market still went out. I don't know how well it works with this pair, sincerely, but I'm saying it here. Look at it. Market is dipping in, and then it's still moving. It did not take you out. It's not going to take you out. This is after you've missed the origin of the move. That's why I said I'm not scared of the storyline starting. Instead, I want it to even start and start going. And then that's where I'm going to be in. Definitely. If it likes it to buy aggressively, if it likes it should stay aggressively. I am going to be a participant. The buy here, continuations. This is your first continuation you saw missed, right? But you saw a couple of continuations and you capitalized on them. So let me check the 30 minutes time frame. Okay, the 30 minutes have not been clear. But now look at this also. Fantastic. That's why, you see, I think Model 5 is my favorite. You know, I've said it separately. Happened, very bullish. Market came back immediately, 30 minutes time frame. Look at this. Didn't go in too much, and then the buy, boom. And then the buy sets in, right? The same thing here too, on the 30 minutes time frame. If you very fast on this right here, this is not a model 5 because of this candle. The presence of this candle doesn't make it a model 5. Yes, it is not. Okay, so this is, you can see these two candles and the next candle, then the next candle. Just a formation of four candles that will give you money. Just four candles, right? So this how you see this from the origin to the models. This is an entire trading setup from the origin move down to the model because daily reject, daily breakout, daily key level refining to H4 key level, the buy starts. This is where you start. Place limit, boom, the buy started. Okay, or more, this thing don't start to the move. You have a lot in your brain. Model 1 to 6, you have a 14B in your brain. How do you execute take continuation? So you have this. Market did not come back to that zone. You have quite one or two will present. At least one or two will show themselves. And when they show themselves, you ought to capitalize on them. And then, boom, the market rallies all the way up. All the way up. And that's what happened on US oil. So one more, and then we're done, and then I'm done. Right? So USDJPY on the daily time frame too. The same thing. Let's go into the daily, into the weekly time frame. Now, this is what happened on USDJPY. There was a rejection from here, if I can remember. Was there? There was a rejection from here on the weekly time frame. So market rejected from here on the weekly time frame, and market started dropping. Now, let's look at the daily and condy. All right, yeah, I think I saw this. Right now, there was a rejection from there on the weekly time frame, and then market started dropping. Now, when the market was dropping, I was still bullish on USDJPY. And the reason I was still bullish on USDJPY is because before the breakouts. Okay, so when the market came, I was looking forward to a KLR inside here. Don't forget, this is a weekly rejection right here. I was looking forward to a KLR because when I was using my iPad, I sincerely didn't see this key level, right? So in the absence of this key level, there is, but in the absence of this key level, this candle, I want to use the opportunity to explain KLR, closed above all this candle, meaning the next week we expect the next candle to open up, drop all the way down into this OCL, and then buy. Remember, when we are treating KLR, we are using QMs, apexes, and OCLs. We are not interested in RBS. Okay, we are not. Now, we expect the market to pull back into this OCL. Now, your point of refinement should be this OCL and this OCL alone. So when you drop into the daily time frame refining, remember your entry zones are only what? Apexes when it comes in form of an apex, right? So I'll box it down a little to this, minimizing it. Remember, why I have the big boxes, the highest probability entry zones are going to come from 50% and below. That's for me. But if it comes above, it's also cool. Don't forget. But you make sure your stop loss cover the entire low. Right? When you come into the H4, that same zone, inside here, look at the engulfing buy. So the engulfing buy presented itself right here. And this is where the buy is going to come from. At this point, you are doing KLR and you are not interested in any price action that is happening in between. That is brain work. Pure brain work. This is pure brain work. Nothing else. You know, even hard. Like how I look at price action is no, it's not hard at all. Maybe your psychology or you're scared of executing or something else. Like I said, my models, I've seen them consistently on gold. But whenever I come to other things, I have to start from the higher time frame, noticing, okay, daily reject, daily H4 breakout or daily breakout. When I see that, I try to play the basics. Or I see a KLR or something. Something that just have to make sense, something that just have to click. And if you do, this my promise to all of you, if you do what I've taught consistently, listen, if you do what I've taught consistently, I promise, okay, there is no way, there is no profitability that you cannot achieve. There is no way, there is nothing that you cannot achieve. Just anything you're doing, also be studying the chart. The day you stop studying the chart is the day market will start beating the hell out of you. Now, those of you in my lifetime mentorship group, I sent a swing trade on S&P 500. I'll be all of you that are in my group. So on WhatsApp, though, some are not on WhatsApp because their payments are not up to taking them there. So if you take a look at that, right, This candle closed bearish. So I was expecting the market to pull all the way back up. So I was using this OCL right here and I box it out. And 50% and above is making an entry high probability. So what I was doing on SPX 500 was what? KLR. So when I come into the daily time frame, inside this big box here, this was it. Before the market come here, this was it. What was I looking at? I was now looking at, okay, the apex right here. And I deleted this. I was looking at the apex. Then I went to the H4 time frame and still what? Look at the apex right here. So I was like, if the market comes here, or more, the money will go chop go plenty because everything makes a lot of sense. But the market decides to come, just take out this high and then sells up. Now, let's still go back into the weekly time frame. Let's come into the daily time frame. Now, the move now started without tagging us in based on the KLR. But then now, how did that move start? The move started when the market trades into this key level right here. The market trades into this key level, rejected, and give us a breakout. Now, daily reject daily, daily breakout. Did I? No. Now, what we are going to be paying attention to is the next day, market pulling back as high as this, and then using this to sell. Yes, but why you need models as always is what if the market doesn't come back? Now, market trades into this on the daily time frame. The next day, trades into the RBS, go into the H4 time frame, market gives a breakout. Immediately after the breakout right here, daily reject daily, don't remember daily breakout. After the breakout, we have this zone to refine and use and sell. We have it to refine, use, and sell. Now, markets come, trade into it, rejected. After the rejection from there, let's say you want to refine, okay? Go into the H1 time frame. You would be using this, right? Even though you know me, I prefer engulfing candles. I'm not going to be trading this, even though it's cool. Market came back into it, which was also a very cool entry. I would explain, right? So market refused to do that. Market just rejected from the H4 key level. This is H4 rejection. At first, market refused. Market used this H4 rejection, then immediately switched to the 15 minutes time frame. I'll be looking for a model. Immediately after the 4-hour rejection here, market gave us a model 5. Don't forget, where's your stop loss? This high. If this white candle is longer, the high of the week, then you play this. What is this? At least you run down to the external liquidity. Take a move out of the market. What do you do now? The entire breakdown, if you are asked to post this entire breakdown, what is that? Daily reject daily, daily breakout. We're expecting the market to go to the apex. Market refused. What did you do? Another daily reject daily SBR, 4-hour breakout. We're expecting the market to go to the apex. We refine it to the H1. Market went to the apex. Quite all right. It did not go to the H1. Okay, rejected immediately. Before even the H4 candle closed. Yes, this one before the H4 candle closed. Market gave us a 15-minute model 5. Use the opportunity of that model 5. Now, in this model 5, right, you can see that the next candle did not tag you in. Is the other candle that came and tagged you in. Sometimes I give a grace of 1-2 candles. The second candle should tag you in. Not always the first candle, because I've seen it also happen consistently. Then this should have been your first move, and this should have been your only move for the day. You don't even need it, just the 1:5 to take out this external liquidity. It's cool. Okay, now you missed the entry. This candle closed below this candle SBR. The stop loss is going to be very big, but what happened here? Entry, sell again. Okay, you missed that one. Okay, now what happened here? This candle closed below this. What happened here? Entry, sell again, model 5. Do you think it was very easy for me to pick S&P? Do you know the number of back testing for me to know that S&P moves similar to gold, and it also gives clean respect of key levels like gold? If S&P is coming to a key level, it is cleanly respecting that key level. Okay, look at this also on the 15 minutes time frame. The same entry I just explained, but it happened on the 15 minutes time frame. Candle close below, immediately pull back up into this, and then sell. Look at it, sell. Going to the 30-minute model 6, right? That was exactly model. Oh, clean on the 30 minutes time frame. Close below, sell. So S&P and gold, they give me what I want. What I'm looking for is exactly what they give me. So I know they no cho. They give me exactly what I'm looking for. S&P and go back. And this is it. Tell me there is something that's going to stop you from passing down your account. And you feel like doctor is passing the account randomly. This is what I do. Nothing special. Nothing special. Okay. In a day, you're going to have so much moves if you understand the models. That's exactly what I said. The moves are going to be so much in your brain. But if you calm down consistently, pay attention, wait for everything to fall in place. When they fall in place, you execute. You see the sniper off of this thing? You see this? It's consistently a sniper, except you did it wrong. If it's not a sniper, you hit SL, and it's cool to hit SL, remember. So if any of you have any question, drop it on my DM. We still have two more videos, Doctor System 5 and 6. But it's going to be send your questions to the group. Okay. The 5 and 6 are going to come after my mentorship. Yeah, the people that pay for the mentorship will have access to 5 and 6. No, I use this one first. Okay. This one will give you what you want. All the money where they look for inside this market, this one will give you. Except if you don't get brain, it will give you. You know? So peace and love don't play. This is the only thing I have to share for today. And the class is going to end in 1 minute. Those of you that have questions, don't forget, just send your questions to the group. I'll attend to all of them. And yeah, I wish you guys all the best. Everybody should go and trade with you. Peace out, yeah?